Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. What we are living through right now has never been experienced by anyone alive. That's how extreme this is, and we haven't even gotten to the peak. Understand this, I'll break it down all for you today, beginning with this. This is the GDP now, and essentially what this is, it comes from the Atlanta Fed, and what they do is they try to forecast what the GDP will be by the time it releases. Okay, so that information is going to come out in the near future, and we will get that. I will bring it to you. But as of right now, they are saying 0.9%. This has continued to fall further and further. And what does that tell us? That we are just this far away, and those who are listening, just an inch away from essentially recession officially. So that means we are at the absolute edge here. And what's going on right now? Well, let me tell you, I'll give you a little spoiler. There is every single piece of data adding up to the fact that things are slowing down rapidly. And this will show up not just in the GDP now or the GDP stats, but in so many others. I'll show you some other ones today. Look at this. If you could see the red line, which is the GDP now, compare that with the University of Michigan expected change in prices. So what do people expect to pay in the following year? Essentially an indicator of inflation, price inflation, and that's going higher and higher and higher. The food that you buy, look at every single thing. What about the gasoline? What about all the petroleum-based products? What about basically anything? They've all gone up considerably over the last couple years. Is it any possibility that that has something to do with all of the currency expansion, the money supply being grossly expanded like we've never seen before? You tell me. Billionaire oil refiner warns Biden to open up the spigots or things will get worse. And this is really key because when you look at what's happening with gasoline prices, my goodness, have they gone truly far and beyond what we can see. I mean, we're already talking about having to add another digit on top of all of the, the indicators for people because they didn't foresee $10 a gallon. Okay, this tells us what kind of world we were living in. And I remember seeing an image somewhere that said there was an apocalyptic movie, and in that movie, the gas was something like $6 a gallon. Okay, in the apocalypse, it's $6 a gallon. Now we've gone beyond that in many areas. So it just shows you what's happening here. And of course, gasoline, oil plays a pivotal role. And I'll show you something else. Stick with me for a second. And don't forget to hit that thumbs up, all right? Stagflation risk rises amid sharp slowdown in growth. Who's this? This is the World Bank saying this. Okay, it's not me saying it. The World Bank is talking about stagflation. The World Bank is warning about it. The IMF is warning about it. And of course, what they are saying right now, you could take all the little ins and outs. They're talking about Ukraine, they're talking about all that, but nobody wants to highlight the money printing. No one wants to talk about the debt and the deficits and everything that's happened since the financial crisis. So we'll just move on with that. But look here, the Commerce Secretary says the brutal reality is that there isn't very much more that can be done on gas prices. You will pay more. Understand this. The price you are paying today, expect it, know this. You are going to pay more in the next month, in the next 2 months, in the next 3 months. If you knew that with certainty, 99.9%, what would you do? Ask yourself that question and then make it happen. Does that mean you got to buy extra food today? Does that mean you got to seek an alternate route? Does that mean you have to carpool with other people? Whatever it takes, make it happen today with the knowledge you have here. Now, what could stop that? What could derail it? Oh, yeah. Demand destruction. When we encounter a period of time in which we go backwards and everything stops, then it changes things. Then the prices can fall. But right now, not the case. This is the big deal. This is the real deal right now that you have to understand. I'm glad you stayed with me because the total consumer credit is at the, believe it or not, actually, I'll show you just here in a second. This is total consumer credit. This is non-revolving credit. And then we have this showing us that this total revolving credit is the second highest ever. So the amount of money basically that people are taking in the form of debt has never been seen essentially right now what we are going through. Never been seen. Extreme levels of debt. Compare the debt to the GDP. It just keeps going up. Okay, so if you say, well, it's a bigger economy today, no, compare the debt to the GDP, it's still the same thing. This is personal debt. This is national debt. This is on any scale you look at. Look at what corporations are doing. This is extreme in every single degree. Okay, so we see all this, and how does that reverberate through the economy? Yeah, you guessed it, layoffs. Layoffs are already happening in the extremes, the Netflix and the Pelotons and that. But this will go on and on and on. It will affect every industry. Student loans, car loans, these are getting bigger and bigger. And I believe that student loans will get a lot higher as students start to say, somebody's going to pay it. I don't have to. Look at what's going on with, this happens to be ExxonMobil. But as I talk about the extremes with certain companies, you look at what happened during this period right now. ExxonMobil, just an example, okay? So this is the 2014 timeframe where it's at an all-time high, and right now, again, same situation, all-time high. Now look at the run-up, okay? So this is the 2000s run-up right here. Just extreme to say the least. Now it's even higher. Now part of the reason was because oil plunged into nothingness, and so we saw the companies, despite how powerful these companies were, you look at this over the period, and I mean, extremes to say the least. So what did we see during this period? Well, at that time, we saw ExxonMobil, which was the biggest company in the world at one point, or one of the biggest companies in the world, literally get taken off of the index. And what was bigger? Zoom. Zoom became a bigger stock than ExxonMobil. That's the craziness of 2020. Okay, I had to bang on my head to get that through. This is just showing us the DXY, so imagine the dollar index, is a measure of how the dollar is performing against 6 currencies. The 3 heaviest components are extremely short energy. The US is essentially energy balanced. The dollar is weakening against energy exporters. In an energy crisis, energy explains most things. So I thought that would be interesting to show you here. You could look at the diagram there or check it out on the link in the description under the sources. But I just found it to be very interesting, to say the least, okay? Because I don't think people realize what happens here. And, it's just a little tidbit of information. I thought you would find it interesting as we move on to look at this. I mean, what's happening with energy? Well, there's so many angles to this. It's not just the price of oil. And the last time I checked, it was approximately $120 a barrel. That's high. That affects gasoline. Gasoline goes up, so on, the drill. But Exxon and Total poised to win stakes in giant Qatari gas project. You remember what happened here, okay? So the EU basically said, we want to do away with Russian gas. Even though we built all this infrastructure, pipelines like crazy, coming from Russia through Ukraine, through other places into Europe, now we want to go and seek alternate partners. So Qatar, I highlighted that a while ago. Qatar, while it was a small group of the total, wants to be a bigger share. So we will see. Whenever there's a crisis, ask the question, cui bono, or who stands to gain, who stands to benefit. And in this case here, Qatar could be one of those benefiting. By the way, I know one of my subscribers mentioned it today. I've talked about it before. Remember the flotillas that were sending the LNG over from the US over to Europe? Well, that's part of the problem why the stockpiles in the US have declined and the prices have gone up. So you see what happened? Yeah, it's short-term positive for those companies that are making money off of that. But it's not good for you, the individual, I think. At least that's the way I look at it. Chile central bank sees smaller rate hikes after boost to 9%. They increased in Chile, they increased their rate by 75 basis points, 9%. So obviously, Chile, different than the US, different than the UK, and so on, but still heavy duty, okay? And then we've got this, just ridiculous. I didn't even want to cover this, but let's do it anyway. Japan adopts view that huge government debt doesn't matter. And let me tell you something. We owe it to ourselves. Oh, it's all internal debt. This is nonsense. Look at who invests in Japan. Please see it for yourself. See that. Don't believe me. Look at who's investing in Japan. It's Japan. It's Japan's central bank. That's it. The pension fund and the central bank. Everybody else, it's a ghost town. Have you ever seen that Japanese ghost town? It's strange. They have like life-size dolls in place of where the people were. That's what's happening right now to the financial system in Japan. And you could say whatever you want about it. That's my opinion. I've studied the history. It's a ghost town. Doesn't mean you can't get in and can't get out if you want to make a trade or something. Doesn't mean you're going to look at the yen and maybe, well, actually, it's done quite poorly. But there might be an opportunity. That's not what I'm saying. Commercial property sales slow as rising interest rates sink deals. You got to know this right now. What's happening is a perfect storm being set up. Look at Japan as the example. Look at what happened with their real estate. Look at what happened with their stock market. Look at it over a long period of time. Not a good sign. Okay? You see this right now taking place as we move through the cycle. You want to be where there is strength and stability. You don't want to be at the fringe. You want to be safe and secure. This is just a little tidbit here. U.S. Treasury monitoring any moves to circumvent Russian sanctions through the use of gold. That's right. If you want to use an alternate currency, you're going to be in big trouble. You better use our SWIFT system, right? Janet. Jan, I call her Jan. That's a personal thing, though. Jan warns inflation is likely to stay high. That's right. They're warning about that. Persistent inflation puts Yellen in the spotlight. Yes, she will be in the spotlight. Treasury Secretary, gotta feel that, right? World Bank slashes global growth forecast to 2.9%, warns on a stagflation risk. That was part of the report that I showed you earlier. Just wanted to clarify what's happening here. Everything has been lining up right now to what we see with, is it stagflation? Is it hyperinflation? Is it deflation? We could feel all these different effects, in fact. I believe in some cases we could see extremes. Some things could go straight up to the moon. Other things could fall down to the floor. Look at what happened during 2020. You saw major deflation in some places. It was very clear. Look at what happened with oil. Some of it was trading in the negative. Never seen that before in history. Okay, so there could be certain extremes that we experience. Look at what's happening with the response from the Federal Reserve and the other central banks. Most of the world is in tightening mode, so we know what that means. Tighter financial conditions, bearish on financials, straight up. That's the way it goes. So you want to keep your money where it is historically sound. At the same time, you want to increase your income wherever you can. So important here, okay? I just released a new channel. I got a new channel. I'll talk about that in a second. Stay with me. Okay, increase your income where you can. Reduce your expenses where you can. Can you cut a little bit here and there? Now's the time to tighten the belt a little bit. Okay, and there are more things that I talked about in the recent video I posted on my other channel. And simply, be smart about where your investments are right now. I think that's really key. Okay, so that other channel, look in the description below. Right under there, I'm going to put at the very top. Okay, that is a new channel that I've set up. The last time I checked here, I had 100 subscribers, so that's awesome. Thank you all for doing that. I hope everybody's gonna sign up. There's gonna be content every single day that's posted on there. Okay, so I hope you will join on there. And even if you don't care about it, you don't care at all, just for to support me, just hit that subscribe, and you don't have to turn the bell on or anything. Just hit that subscribe just so we get the numbers up. Try to get that number, to tens of thousands of people in a very short period of time. So we'll be mentioning that more often. Click that link, hit that subscribe button, and I'll see you on the next one. Take care.